Hello, everyone. Thanks for joining us on one of our weekly educational presentations. Now, today, I want to talk to you about winning swing trades. I would venture to say that a lot of people like to trade a swing style of trading, but they're not really familiar with the actual process. So let me share with you the three phases of swing trading. For example, swing one is usually exemplified through some type of strong trend, either up or down. In this case, we're showing you a strong uptrend. And then we fall into swing two, which is mostly a counter trend, which is usually followed by swing three, which is a resumption of trend. Now, what you're trying to do as a trader with most swing traders is to buy somewhere around here at the end or the bottom of swing two before swing three begins. And that's the way a lot of swing traders like to actually trade this particular method. For example, let's take a look at this chart here. Here's a weekly chart of CRWD. All right, so we could label this nice, strong upward move as phase one. And then as it declines into the counter trend, this could be phase two, and then the resumption of the upward trend, which is phase three. So remember, as traders, swing traders, we want to buy somewhere down here at lower levels before the trend starts to make new highs. But then we have to ask ourselves, is there a strategy specifically designed to identify these high probability swing entries? Because it's difficult. How would you know when swing phase number two is ending or if it's going to continue going in that direction? So we want to look for some type of methodology or a strategy that actually identifies these high probability swing entries. Well, that's what we're going to be talking about today because there actually is. For example, looking back at that chart again, we wanted to buy somewhere around here. Well, the strategy I'm going to be sharing with you actually identified and generated a buy signal right here at or near the bottom before the trend resumed upwards. Now, the best thing about this strategy is that it also generates exit levels. So you would have known to exit right here had you chosen to do so, and potentially could have captured a nice 120-point gain. And that was before price started to falter and give away a lot of your profits. So this is what we're going to be talking about today. Winning swing trades using this really high probability method that we have specifically for swing traders. Here's the good news. All the buy and exit signals are automatically displayed on the PTS Primo charting platform. I developed and designed with pro trader strategies to make trading simple. So welcome to this week's educational presentation. My name is Stephen Primo, president and founder of Specialist Trading. I've been trading now for nearly 50 years, 5 decades. It's unbelievable. I can't believe I started out trading where it was just I started out as a summer job in 1977. And now starting next year, it'll be 49 total years, okay? Now, I started out my career on the floor of the Pacific Stock Exchange, where I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. So a specialist makes markets in roughly about 50 or 60 stocks. So that's what I did while I was on the floor. I made markets in stocks like Waste Management, IBM, and I traded through the crash of 87 and the bull market that followed. After I left the floor in the mid-90s, I managed money. I also traded my own account. And then recently, roughly about 15 years ago, if you want to look at that as recently, I formulated specialist trading where I teamed up with pro trader strategies. And we had one goal in mind, and that was just simply to educate traders. And by you attending today's educational class, you see that that's really our goal, simply to educate you so that you can make your own trading decisions and ultimately be in charge of your own trading destiny. That's our goal. That's the purpose that we have. And that's the one real thing that we really try to identify with, trying to educate you so that you can be in charge of your own trading destiny. And you'll see that attention to that in today's educational class. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results by using this swing trading method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, as I state each and every Wednesday, if you'd like to get more education on a daily basis, two ways to get that. You can either follow us on X, or formerly known as Twitter. There's our handle right there at SPCLSTTRADG. I would suggest copying that down, because every day I post anywhere from 5 to 7 different snapshots of signals our methods have generated, or also little bits of financial wisdom. Now, we have a lot of people now following us and watching us on YouTube. We are streaming live, so you can also hit the subscribe button and you'll get a lot more content there as well. So two different ways to get education from us, either to follow us on X, formerly known as Twitter, or to subscribe on YouTube. Okay, with that stated, let's begin today's educational presentation. And you saw the 3 phases we talked about swing trading in the opening segment. And we want to know, is there a way in which to identify these high probability entries? Well, yes, there is. We have developed a high probability strategy based on all the things I've learned in my nearly 5 decades of trading. And that's called strategy number 9. So let me share with you some of the highlights of this particular method. It's a buy low, sell high, swing or pullback strategy. Now, swing trading and pullback trading are very similar, meaning that you like to buy at the lower levels before trend resumes on its upward way, or sell short or buy puts at the higher levels before trend moves lower. Now, it's based on a proprietary indicator-based method, and we keep this, all the rules and all the calculations in-house, because we want to focus more on teaching you how to apply it rather than having to spend time and hours figuring out how to calculate it. Now, the good news about strategy number 9, you can apply it to any market, any time frame, and any direction. We're going to focus mainly on stocks, but trust me, we have traders trading strategy number 9 in crypto, in currency pairs, and in the E-mini futures. That's my market of choice, and that's where I usually use it. Now, as you see here, any time frame. It's just my personal preference, though. The best swing trades I have seen in my experience usually happen in weekly charts, because that's where you get these nice swings without any noise. When you have a smaller time frame, I know we have a lot of intraday traders here. Now, when there's this, kind of a quiet, choppy market, you can get what we call noise, and you'll get whipsawed out a lot, and the signals won't be as consistent as without that noise. Now, one way to reduce that noise is to go to higher time frames. So if you're able to do it, I would highly suggest, not recommend, it's not a requirement, but I would suggest applying strategy number 9 on weekly charts. And because of that, I'm going to share with you all the examples in today's course, you looking and using weekly time frames. Now, here's another great advantage of strategy number 9. If you're an option trader, you can apply it to option trading. Why? Because if you get a buy signal, it's generating these buy signals in that second phase at the lower levels, right? So this means the premiums will be much lower. So a lot of our option students love this because they can apply it with option trade. They don't have to buy the stock, or they don't have to buy the currency pair. They just trade options. But with all of our methods, we teach all of our students first. It is not a suggestion, it is a requirement that you must paper trade first. Think of any other endeavor, any hobby, any other career. No one just jumps into something without going through some type of rehearsal, some type of practice phase. All right. Think of an athlete. They always practice. They're always pre-season prior to actually playing the real games. Think of an entertainer or an actor and actress. There's always rehearsal prior to actually acting in the movie or in the play. It's no different with trading. You must paper trade first to really fully understand the process before you actually jump into the arena. Now, our edge with not only strategy number 9, but with all of our methods is consistency. But let me define what consistency is, because we know a lot of students have a different definition. They think that consistency means there's a great number of winners. Well, that can be true, but that's not really what we rely on when we say consistency. Consistency means that there will be losses from time to time, and that's perfectly okay. But a consistent method is one that's able to recoup those losses. So that's what we're trying to do. We're trying to recoup those losses often on the very next setup, so that you'll have this kind of 2 steps forward, one step back approach. Okay, so that's what we're looking for. 2 steps forward, 1 step back, so that when you look at your profit and loss statement, it's not like a roller coaster the way so many other strategies have, because many times they'll have these tremendous winners and then they give it all back. That's not a consistent method. That's more of a gambling type method. What we want to do is have nice upward slope in your profit and loss statement. And all of our methods are extremely consistent. Okay, so let's look at some current strategy number 9 examples and walk you through the process of how you would apply it, and especially how you would apply it using the PTS Primo charting platform. It makes swing trading simple. We developed it that way so that it auto-identifies these swing signals for you automatically so that you can focus on where you want to exit, where you want to place your stop, and different points of entry. And remember, we're going to be looking at weekly charts because, as I said earlier, this is where you get a lot of the really nice swing movements, okay? All right, so let's start out looking at this chart. Here's a weekly chart of XEL. Now, someone looking at this will say, well, Steve, we're in a downtrend, so I should probably stay away from it, right? Well, maybe, maybe not. Let's see what strategy number 9 says. On our platform, it's as simple as just clicking on strategy number 9 in the green strategy tab with all of our methods and techniques. And in the drop-down menu, just click on signal arrow. Now, it will tell you if there's a buy signal there or not. Now, where you thought you were in a downtrend, guess what? Strategy 9 generated a buy signal. So this is actually telling you that this is in phase 2. You've already had the uptrend. You're in phase 2. Now, where do you want to exit? Because that will determine whether you want to get into the trade or not. So once again, click on strategy number 9. And one of our most popular and simple ways to exit, because we offer and provide you with a number of different exit plans, but this is just one of them. It's auto-generated on the platform. It's called range extension exits. It's a formula that we teach you how to do, but it's automatically generated on the platform, and it gives you roughly 4 different levels to exit. Now, if you're the type of trader that likes to get in and out quickly, you would use exit level 1 or 2. Now, we always tell if you're swing trading, which strategy number 9 is built for, well, most likely the trend is going to resume and make new highs. So you would use exit level 3 or 4. It's up to you. It's your choice. Remember, I stated in the beginning of the presentation, our job as a mentor, as an educator, is to provide you with this information that I've accumulated in nearly 5 decades so that ultimately you can make your own choice. So we're providing you with these different exit levels, but it's up to you to decide. Now, for all intents and purposes, let's just say we believe that all of these swing setups are going to really make new highs. So we'll use the 4th and final exit level, okay? So let's say we decided to place a limit right here to exit. Well, look what happened. In a few months, remember, these are weekly charts, you made a quick 15 points and exited before price started to falter and go lower, and you would have given back a lot of your profit. So this is how simple the process is. Let's look at another example, okay? Once again, we have a weekly chart of ARM going down lower. Most traders would say, hey, Steve, this is in a downtrend. Look at this real strong downward day. We're just making a ledge before we go lower. Well, you could be right, but let's see if the proprietary calculation in strategy number 9 is telling us anything. So we click on, once again, strategy number 9. And yes, it generated a buy signal. So this is actually phase 2 of the swing phases, all right? It's not the beginning of a strong downtrend. It's actually saying this downward move, this counter trend, is most likely to be coming to an end. And we're going to be probably making new highs. We click on the range extensions. Now, after we started to go up, okay, we want to make sure we're in the right direction. So let's see where we could get out, either here or here. Let's once again use exit level number 4. Just place a limit here. And in a little over a month, we made 35 points. Not a bad little trade, right? Just for staying in the trade for a month, for a nice swing move before we would have given back all of our profits. This is the beauty and the simplicity of our platform. Everything is one click away. We teach you the process and show you what all of our methods are based on, and also the exit levels and the stop placements, but then we let you decide how you want to trade it. Here's another example, ODFL, okay? Going lower, right? So you say to yourself, okay, well, maybe this is the beginning of a strong downward move. Maybe it's phase 1, but then look what happens. And you say, oh, okay, so this was actually phase 2, And now we're going to make new highs. So I should go long, right? Well, let's see what proprietary strategy 9 says. Click on signal arrow, and it will tell you if there was a buy signal there. And guess what? This is not phase 2 in the beginning of phase 3. This is actually phase 2. This little bounce was the counter trend, and this was phase 1, and this was phase 2. So this is why so many students lose money, regardless of market or time frame, because they're out of sync with what the market wants to do. They think this is the beginning of a brand new trend. Maybe some guy in a chat room or a trade room said, hey, we're making new highs. We're going to go even higher. You got to be on board and buy this thing. Look at it gapped up here. No, according to what strategy 9 is saying, no, this is just a bounce. This is just a pullback. This is just a phase 2 of the swing process. You should be selling into this rally. Okay, so let's say you trusted strategy 9 and decided to sell, but you want to know where you're going to cover your short. Maybe you bought puts. You want to know where to get out to sell the puts. Well, click on strategy number 9 again. Click on range extension exits. And the same process applies, but this time to the downside. Now, if you were just normally trading, you want to get out quickly, well, you use these first 2 exit levels. But remember, as swing traders, most likely the trend will resume and continue much lower. So you would use either level 3 or 4. Once again, just for educational purposes, in this webinar, we're going to use level 4 in all of our examples. So let's say we placed a limit or drew some type of imaginary line telling us if we had puts, that's what we're going to get out. And a nice 40-point gain in about 5 months, okay? So you see, this is the same process, but now we're just using it to the downside. Now, let's say you were long the stock. You could have used this as a place to exit your long position and waited for a strategy number 9 buy signal to come back in. You would have saved yourself a good 40-point loss there. And as we saw, price starts to go right back up. Okay, let's look at NVIDIA, all right? Here we have phase 1, phase 2, strategy number 9 generated a buy signal on this downward phase 2 swing. Here are our exit points. Once again, let's take the top level for exiting. And there's a nice quick 40 points in just a couple of months before price started to falter, just last month, okay? Now, strategy number 9 does not look at any fundamental news. It does not care about interest rates. It does not care about what's going on economically. It only looks at price at these 3 levels of the swing. That's all you need to look at. There's no reason to overcomplicate your trading with all these things that my mentor said were useless noise. I used to look at news, I used to look at earnings reports, I used to look at economic reports, and guess what? It didn't make me a dime. My first year or two, I didn't think I was going to be on the floor much. I was talking about this with a student the other day because I couldn't make ends meet. I was taught all the same things that most likely you're taught nearly 5 decades later, and there's just no consistency in that. My mentors taught me to look at one and only one thing, and that's the chart in front of me, because that's where all the answers are. In fact, that's the source of what you're trading, so why not take everything from that source? Once I started to learn how to do that, that's where my trading turned around, okay? So trading is simple when you get out of your own way. Here's another example, VRTX, another weekly chart. Well, wow, what is this? So this must be phase 2. This downward move was phase 1, phase 2, and according to this, we're going to be having another strong downward move. So where do we want to exit? Well, here are our 4 exits. Let's take the 4th and final one, since a strong phase downward move, phase 3 would make new lows. So let's say we decided to exit here, and guess what? 70 points in just 1 month. Now, once again, if you were long this stock, you could have used this sell point here as a point of reference to exit your position, to save yourself a 70-point loss. Whereas if you were more adventurous type of trader and more, I would say, not advanced, but actually more aggressive, well, you would go short and you would have had a nice 70-point gain in just about 3 to 4 weeks. And look what happened after that. Price went all the way back up. So you could have looked at that as well. Now we're beginning another phase 1, and I will wait for another phase 2 to get in. Here's a chart of Bitcoin, okay? 43,000 using the same concept. Here was phase one, phase two. Look where strategy 9 generated a buy signal, right or at the very lows of that phase two. And in about 5 months, 43,000 Bitcoin points before it started to come down lower. Or we can apply this to currency pairs. Here's a weekly chart of the British pound Swiss franc. Now this is a phase one to the downside, phase two up, generated a sell signal. Here's our exit point. We could have exited about 5 months later with a 550 pip gain. That's thousands of dollars profit potentially could have captured. And if you missed that one, well, guess what? Here's another phase one, phase two, a sell signal right there. And here are the 4 exit levels. Using the lowest one, you could have potentially captured 535 pips. So had you taken both signals, we're talking about over 10,000 pips. That's just thousands, tens of thousands of dollars on a weekly time frame just with these 2 signals. Potentially you could have captured. All right, remember that chart we opened up today's presentation with, a weekly chart of crowd, CRWD, all right? Remember, we labeled this as phase one, beginning of trend. And then it's followed by phase two, which is a counter trend. This is where most traders falter because they say, well, Steve, I went to that chat room and the guy says, now we're going to hit a downtrend and most likely we're going to head much lower. Where in all actuality, if we're in phase two, this is a buying opportunity. And then we're followed by phase three. So you want to be able to buy somewhere here at the end of phase two. The only trouble is it's very difficult to determine when phase two is going to end or stop. That's the beauty of strategy 9, because all you have to do is click it on. Once you find out that you're in phase two, which we teach you what to look for, click on strategy 9, click on signal arrow, and it will tell you a high probability buy setup. We will share with you several ways to place your stop, several ways to enter, and also several ways to exit. Now, one of the most powerful and as popular, I should say, ways as well of trading swing trades is using the range extensions. So once again, click on strategy number 9, click on range extensions, and you'll see right here the 4 exit levels. Now, you can use range extensions with any of the strategies we trade. We have short-term models, we have different type of continuation strategies, but with swing trading, most likely, if you are in the right phase, you will be making new highs. So it's suggested to use either the 3rd or 4th exit levels. Let's say we use the 4th. Well, that was a nice trade because in a matter of a couple of months, we could have potentially captured 120 points using this simple high probability swing trading method. And look what happened after that. Price began to falter and you would have given away a good portion of your profit. So there we just shared with you currency pair examples, Bitcoin, crypto, and stock examples. And we were mainly looking at weekly charts. But remember, you can apply it to any time frame, any market. It's just been my experience that weekly charts gets rid of a lot of that intraday noise that you'll find from time to time. So these are some winning swing trades by applying strategy number 9. Now, let's review really quickly. Remember, there are 3 phases to swing trading. The first is swing 1, where there is a nice trend that takes place. This is followed by a counter trend. This is where most people think the trend is ended and we're now going to begin a brand new strong trend to the downside. But if it's a valid swing 2, most likely it will end before price resumes its upward move and makes new highs. So the trick to swing trading is to be able to buy somewhere at these levels. And that's what we've shown you what strategy number 9 does. It's a buy low, sell high, swing, or pullback strategy. It does this by applying a proprietary indicator-based method. Now, you can apply it to any market, any time frame, and any direction. One of the best things, the best advantages is if you're an option trader, it's perfect for option trading. But please, if you decide to become a student of mine in the strategy number 9 course, I will require that you paper trade for us. I just don't want students to jump in with both feet first, because I can almost guarantee you that you will lose immediately, not because the strategy is faulty or not consistent, but because you are not applying the rules correctly. You're entering at the wrong point. You're exiting at the wrong point. So we want everyone to paper trade. Now, there will be small losses from time to time. That's perfectly okay. In fact, yesterday I had beginning my day in my trading, I had, I believe, 2 losses right off the bat. And then the remaining next portion of the day, I had a series of wins because of the nice volatility. I think 4 or 5 wins after that. So that's what consistency means. All of our methods at specialist trading are extremely consistent, meaning there will be losses from time to time. But a consistent method is one that's able to recoup those losses. And that's what we're trying to instill in all of you. We want to get away from that mentality of looking to hit a home run, because that will happen every once in a while. But remember, with those methods, oftentimes they give everything back, and that's not consistency. That, once again, is a gambling mentality. We want to get away from that. We want you to have this nice upward slope in your profit and loss. Now, I want to ask you a question. Do you think swing strategy number 9 that I just shared with you, all these examples, can help your trading going into 2026? I mean, it's hard to believe we only have a couple of weeks left in 2025. I know the majority of you are nowhere near where you thought you'd be by the end of this year, right? We always make all these promises and hopes and dreams at the beginning of the year of where we want to be at the end of the year. We want to make that extra money, that extra income, right? Or maybe we want to make that extra money to go on that dream vacation, or maybe that addition to our home or our structure. And I would venture to say that the majority of all traders never reach that. Why? It's because we're all being taught the same thing I was taught nearly 5 decades ago. You know, looking at news, looking at earnings, looking at interest rates, looking at economic factors. These things really don't have a lot of consistency to them. If you learn to focus on the market, on the chart in front of you, that, in my opinion, is where you become a consistent trader. And that's what strategy number 9 does. So I truly believe it can help your trading going into 2026. So because you took time out of your Wednesday to come hear me speak on strategy number 9, we have a great offer for all of you attending today. This is called our Winning Swing Pullback Trading Special. It's strategy number 9. You're going to get detailed video course instruction. We're going to learn all the different entries, exits, and stop placements for you to choose from so that you feel comfortable trading. You'll get the entire course rules with all the strategy add-ons that you can apply to any market, any time frame. Also, you'll get a scanner so that you can scan on a nightly basis for the strategy number 9 setups. But, whoops, we're also going to include an extra bonus. Kind of jumped the gun a little bit there. And here's the extra bonus. You saw all the examples today were coming from the PTS Primo Charting platform, and how with one click you could get these signals for entries and exit points. Well, guess what? We're going to offer you a full year free if you decide to become a student of the strategy number 9 course. A full year free. You're going to save close to $1,800. That's a 35% discount. Now, you're not just going to get strategy number 9 on the platform. It comes with a host of different tips, techniques, and other strategies that I've accumulated in my nearly 50 years of trading. That's all on the platform that you won't find on any other platform. None of the major platforms. I won't say their names. I almost did, but none of the major platforms, because these are things I've accumulated from my days on the floor. And they're not really available anywhere else other than on the PTS Primo Charting platform. Let me just give you a tip of the iceberg. Now, along with strategy number 9, obviously, you'll get what we call our enhanced buy-sell line. These are 4 different ways to find out what the overall trend is instantly in any market and in any time frame. We said earlier, you'll get the signal scanner. You can scan on the platform for nightly signals, all right? You'll also get a strength of trend tool. You'll be able to find any market and find out with this tool that I developed with Pro Trader Strategies if the trend has a lot more room left to go in its direction, or if it's running out of gas. You get these auto-generated exit levels, just some of them I just shared with you today, along with over 90 of the most prominent technical indicators, and this all comes with personalized tech support. This is just the tip of the iceberg. I can't go into all the things on the platform, but these are the things that are the most popular and that our students really love. Now, if you're still not convinced with strategy number 9 and with the platform, let me share with you an example here. Here's an example in the QQQs. This is a weekly chart of the QQQs. For those of you who aren't unfamiliar with, that's the ETF that represents the NASDAQ market, okay? Now, someone looking at this would say, well, okay, it looks like this is swing 2, and now we're going to make new lows, right? I'm not really sure. Well, let's follow the same process because you can use this on ETFs, on indices to find out what the direction of the market is. And that will help you to decide if you want to take a trade in a stock or maybe options. It's entirely up to you. But if we clicked on strategy number 9, we would have seen that this was not phase 2 and then phase 3. This is actually phase 2. These 2 down days here were phase 2, or 2 weeks, I should say, were phase 2 to the downside. So this is a buying opportunity. All right, so let's say you decided to maybe go long the QQQs, or maybe you used it as a market directional tool to invest in something else in the NASDAQ. Well, where will we get out? Once again, we use the same process. Here are the 4 exit levels. Let's, for all intents and purposes, say that we want to use this, the 4th level, because we think it's really going to move to the upside. Well, that's where you place your exit point, your limit order, or if you had some type of option strategy or the calls, that's where you would identify where to exit. And in a matter of months, guess what? You would have exited there. And if you decided to go long the QQQs, you would have had a 40-point gain. That represents thousands, literally thousands of points in the NASDAQ, okay? Now, let's say you exited there and said, hey, thank you. That was a nice little profit there in about 5 months. And then look what happened. It went up and then fell out of bed. Well, you would have thanked your lucky stars, but guess what? Does this look familiar? Because this actually happened about 5 years ago. Do you remember the COVID pandemic and remember where the market fell out of bed? Well, strategy number 9 would have had you exiting the QQQs a full 1, 2, 3, 4 weeks prior to that happening. So this was actually January 2020, roughly about almost 6 years ago, where you would have been out of the market entirely. So remember, we're talking about winning swing strategies. And a year from today, I truly believe you will have wished you became a member of the strategy number 9 course. This is how valid this method is. Okay, so let's break this down. What's the attendee offer we have for you? We have a great discount. All right, you're going to get all of this plus a full year of the platform. Now, normally, strategy number 9 plus a full year of the platform would cost you over $4,700, but we're not going to charge you that at all. We're going to discount that tremendously down to only $29.95. You're going to save over $1,700. That's a 35% discount, but that is for a limited time only. Now, we realize that some people may not be able to come up with $29.95. So ProTrader Strategies, who was in charge of all the billing, also in charge of all the discounts, they, for a limited time, will also allow payment plans. This means you don't have to come up with $29.95. You can come up with a fraction of that cost, establish a payment plan, and you can be up and running with strategy number 9 as early as today, this afternoon. You can be using it, scanning for signals tomorrow, and start off 2026 in the right direction. So there's 2 ways to get this great deal. Get the great 35% discount, $29.95, paying it in full, or get a payment plan. Establish a payment plan with ProTrader Strategies for a fraction of that $29.95, and just establish a payment plan. You can be up and running as early as today. Either way you decide to purchase strategy number 9, you still get a full year free of the platform, okay? Here's how to take advantage of this great offer. Contact ProTrader Strategies. As I said earlier, they are in charge of all the discounts, all the payment plans, and all the payment process. They can get you up and running, as I said, as early as today if you like. I would highly recommend giving them a call at 310-598-6677. There's absolutely no obligation at all. They can answer any questions about establishing a payment plan, or if you're already set, you can give them your credit card over the phone and purchase it and get set with tech support and have it set up for you as early as today. Now, that link you see at the very bottom, it's not a live link, but it will take you to the info page on this strategy number 9 method. Now, what we've done is we've already posted a live link in the chat box. So if you go to that little Zoom tray there and click on chat, you'll see that there's a live link posted there. So you don't have to copy and paste at the bottom of the screen. You can just click that on, okay? But I would really recommend calling ProTrader Strategies. There's no obligation. They're there to work with you. They're very flexible, and they'd be willing to answer any question that you may have, okay? Now, talking about questions, if you happen to have any questions about what I went over today, strategy number 9, trading the markets, go to your chat box or your question and answer box right now in the Zoom tray. Just click them on and type them in, and I will answer any question that you may have. Someone's asking, Steve, what do you use strategy number 9 on? Well, as I stated, I use it intraday because I'm an intraday trader, but I only use it intraday when there's a strong trendy market. Because when the markets, like in the summertime, are going pretty much flat and there's not a lot of volatility, well, that's when I usually stay away from it because the signals will be whipsawed, like with any other method. But as we've seen lately, there have been some really nice big moves to the upside and to the downside. Strategy number 9 has been working great on the E-mini futures. Okay, so it really doesn't matter. You will see signals in all markets and all time frames. In the course, we teach you which ones to look for. Okay, let me see. There's another question here. It says, do the buy and sell arrows get generated while a candle is still fluctuating, or do I need to wait for the candle to close? No, that's a good question. You need to wait for the candle to close because everything is based on the close of that bar. So if you're looking at a 5-minute bar, you may see a buy and sell arrow there, and you'll say, hey, that means I just buy, maybe I'll buy at the market. You have to wait for that 5-minute time frame to close because everything can change. You know, you can see a buy arrow, let's say, at the 3-minute mark, and you still have 2 minutes left before the bar closes. And in that 2 remaining minutes, if you purchased it, maybe things can change. Maybe the bar will automatically change direction and go straight down, or maybe go straight up, and there's no longer an actual buy signal there. The formula has negated that signal. So we always wait for the bar to close, whatever the time frame. Could be a weekly time frame, you wait for the week to end, or if it's a 10-minute time frame, you wait for the 10-minute bar to end. Now, one thing I do tell my students, it's a little bit more advanced, but let's say it's you're looking at an hourly chart, okay, and you happen to have a buy signal there. You don't have to wait actually for the bar to close. If it's, let's say, 10 seconds before, most likely things are not going to change in the last 10 seconds. So you can, let's say, buy at the market or place a limit in there very close to where price is. If you have maybe 10 or 5 seconds left to go before the bar to close, you can do that. It's a little bit more advanced, but you don't have to wait literally for the bar to close, okay? That's a good question, okay? How many exit points are there? Well, in the range extensions, which I shared with you today, which is just one way to exit, you have 4 different levels, and I shared with you which the levels are for this particular method. You would use either level 3 or 4. But we have upwards for different strategies and methods, upwards of 6 or 7 different ways to exit. All different ways to exit using our proprietary methods and different patterns and using different indicators. So remember, our job as a mentor is to provide you with this information so that you can feel comfortable. I mean, how many, I know I have, but how many of you have purchased in the past a method or a technique or an indicator, and it looked like gold when the person was explaining it, and the minute you get it, you don't have any idea how to use it, you don't feel comfortable with it. Maybe the strategy generates 100 signals every day, or maybe the strategy generates 1 signal every month. So you have to trade something that makes you feel comfortable. And so that's why we provide you with all these different entries, exits, stop placements, so that you can pick and choose out of kind of like a buffet line of what makes you feel comfortable. Why? Because you will never be consistent until you feel comfortable with your trading method. So therefore, you should never buy something where someone says, everyone buys at the same place, everyone sells at the same place, everyone exits, everyone places their stop at the same place, because that's not coming from you. You're not a part of the process. You need to be a part of the process. You need to be a part of the decision making. And that's what we do as mentors. That's why we are an educational company. We don't have chat rooms or trading rooms at Pro Trader Strategies and Specialist Trading, because that would be counterproductive. We would be telling you how to trade. We don't believe in that. We're providing you with high probability methods, techniques, and strategies so that ultimately you can decide for yourself. That, in our opinion, is the secret to consistency, okay? Good questions, though. Any more questions? How long is this offer for? Well, usually, Pro Trader Strategies is in charge of all the offer and the discounts and setting up the payment plans. Usually no more than a week, sometimes just a couple of days. I would call them. That's why I say There's no obligation. They're very flexible. They're there to work with you, and there's no obligation. They're manning the phones right now. They'd be more than happy to take your phone call and answer any question, give you a quote on establishing a payment plan, okay? But I would just say if you're at all interested in taking this special offer, don't sit on it because most likely if you wait for the next year, you say, you know what, I'm going to take advantage of that. I'm going to buy that in January, February. Well, this will be back up to close to $5,000 again. So take advantage of this if you're interested in strategy number 9, swing pullback trading method. Okay? All right, if there are no further questions, let's take one last look at our disclaimer. And as we close here, I just want to thank you so much. I know you have a lot of different things you're going to be doing right now on your Wednesday, trading being one of them. I just want to say thanks for attending. But most especially, I hope you learned something and that we're really trying to educate you as educators, because it's our opinion that there are just an infinite amount of profits on a daily basis. There's more than enough profits for everyone. So why not teach people how to accumulate these profits? Why not share with them the things that have worked for us in the past and have been shown to be highly consistent? So in closing, I just want to say thank you once again. I wish you all the best of luck, but most especially, I look forward to all of you becoming students of mine in the Strategy Number 9 course. Thank you so much. Have a great day, and I hope to see you in class. Bye-bye.